Good afternoon, everyone. Thanks very much for joining me. It's now 1 o'clock, so we'll make a prompt start. So first of all, a big thank you to you for being on time, to making sure that you can see the whole of this webinar. Bit of housekeeping to start off with. So if you look at your menu that you've got on your computer screen right now, you should have a Q&A section. And in that Q&A section, you can ask me any questions that you want to as we go through this webinar. Feel free, as soon as that question pops up in your head, to ask the question. Put it in the Q&A section, and I will, at some point, it might be at the end, but I will address that question if you ask it. Second thing is, I should have done this first, really, but can you please put in that Q&A box that you can hear me? Because I'll start the webinar straight away as soon as I know that you guys can hear me and we're all connected and we're all up and running. So just a yes, a tick, something positive, put it in that Q&A box so that I know that you guys can hear me. Yeah, perfect. Thanks. A few of you have answered. Really appreciate it. Thank you very much. So let me get rid of those questions. Thanks, guys. Appreciate it. Let me get rid of those questions. So that is exactly the same place that you put your questions if you think of any all the way through. So this webinar, what we're going to talk about today is buyer's markets, what it means, what the benefits are, what the opportunities are for you, when you should take control of it, and how you take advantage of that buyer's market. You've probably heard it quite a lot. And look, this has changed. It's not always a buyer's market. A little while ago, we were in a seller's market. And these things kind of rotate around, is it a seller's market right now in property? Is it a buyer's market? I'd say that the majority of the time it is a seller's market. It's far less a buyer's market than it is a seller's market. So now that it is a buyer's market, and hey, look, you're a buyer, right? You want to buy property, you want to build your portfolio. So if it doesn't happen very often, what does it mean? What is the opportunity, and how the hell do you take advantage of it to get ahead of everybody else? So without further ado, let's get into the webinar. So the problems that you might be facing at building your portfolio right now is you might not know if you're making the right decisions. There's a huge amount of information about property. There's a huge amount of different ways that you can make money from property. And it's very difficult to pinpoint and navigate towards just one direction, to say, this is what I'm going to do, this is how I'm going to do it, and just stay focused on that point of course, because there's so many different ways to do it. And so many people out there on social media, for example, telling you how well they're doing for themselves, and they're probably doing something different to you. And of course, you're going to ask yourself, should I be doing that as well? They're having success. I'm not having as much success, so I should be doing that, right? That's logic. But there's so many more things that are involved in making that decision than just how successful somebody else is. So the first point is that you don't know that you're making the right decisions. When you do know what kind of properties that you're looking for, even when you've got that strategy in mind that you're going to follow, be it lease options, assisted sales, HMO, buy to let, commercial conversions, doesn't matter what it is. Once you've pinned down a strategy, how do you know what property to look for? How do you know that you're taking everything into consideration when you're looking at that property and you're not leaving anything out? Thirdly, when we're talking about this buyer's market, is now the right time to be buying property? Because it's all well and good somebody saying, yeah, it's a buyer's market. But if you go for funding and your funding still comes back at like 6%, 7%, and for those of you who were looking at property from before COVID, and when the base rate was at 0.25% for a long time, you're going to be thinking, well, 6% for lending is still very, very high. I remember when it was 2%. The same kind of deal was 2%. So surely paying 300% times, like 300 times more than I was just 6 or 7 years ago, that can't be sensible, right? Is now the right time? So you might be skeptical because of the limited amount of history that you have within property. And if now is right, why is that funding expensive? Are you being exploited? Are you not finding the right kind of funding? Are there options out there that are still at 2% like there were 6 or 7 years ago? Or is that not there? And the rules of the game have changed a little bit since back then. And all of these messages, all of that combined, comes to you and just creates doubt. And if you've got that doubt, you don't know, and you're limited, and you're hesitant at taking a step forward. And that, frankly, that can be the difference between being financially very wealthy and in exactly the same position as you are now. That's the difference. So what we're going to try to address in this webinar is understanding what a buyer's market is. In fact, let's go to the next slide. What a buyer's market really means. What exactly is the opportunity? How do you take advantage of it? Because, there's loads of different ways that you can take advantage of an opportunity within property. But how exactly should you take advantage of a buyer's market? And if we are talking about buyer's markets, is now the right time to buy, or should you be waiting for the seller's market? Because maybe the seller's market is the right situation for you to buy in. So we'll give you a lot of clarity around those two different situations. And if now is a buyer's market and you're here on this webinar, Chris, telling us that now's the time to buy, why aren't more people taking advantage of it? Well, it's because not all of them have come to webinars like this that have got a perspective on just clarity, giving you clarity. So why am I the right person to be talking to you about this kind of thing? So my name is Chris. I'm one of the directors here at Sourced. I've got over 15 years experience within property. I started off by just buying buy-to-lets. I then found out that you don't make a huge amount of money from buy-to-lets, certainly not the ones that I was buying back then. And I changed my strategy, and I learned everything that I could about the new strategy that I'd got into. And it was at that point that I realized there's so much more to property than just estate agents and mortgages and you just buying vanilla stuff. There's so many more ways that you can make money out of property. And I educated myself. It's all kind of self-taught for me. I focused on understanding finance and understanding contracts, and understanding the flexibility that's in the system. And once you understand the flexibility, man, the world of property investing just opens up to you. So I'm a director of Sourced, which means that we've got four companies that are underneath us at Sourced, all property based. We've got two franchises. We've got a property franchise, a property investment franchise, and we've got a letting agency franchise. We've got a financial accountancy solution for all landlords, where we can set up SPVs and we can do the end of year returns for those SPVs for a price that's much cheaper than accountants. And we've got in-house brokers, right? So I kind of oversee and help each one of those businesses grow. And so when I'm looking at property and property investing, I'm not just looking at it from a property investor's point of view or a deal sourcer's point of view or a broker's point of view or somebody else that's involved in property kind of view. I view it from all of those different angles. So our perspective and the oversight that we have in property is completely different. And you know what? Because of that, I'm not here to just say nice, good stuff about property. The perspective that we have with Sourced and with our franchisees is that, yeah, we'll tell you the good stuff, but we're also going to tell you the bad stuff. Because as well as preparing for the good stuff happening, you need to prepare and mitigate for the bad stuff happening. And that's the perspective that we have here. We're much more holistic than you might find at just, somebody that's trying to sell you a course, because that is not at all what we're about. So, like I say, we have four different divisions, four different sub businesses under the Source Group banner, and we have over 230 partners who are part of the Source Group, who are out there trying to do property investing, different strategies, and execute different ways of making money through property with our help, with us standing by their side. So over the time, we've been in business for for about 9 years now, and I've been involved in Sourced for all of those 9 years. We have analysed over 250,000 deals for our property partners. So every deal that these guys find, they'll bring to us, they'll put into the CRM, which we've built for them, and they'll hand them over to us and say, "This is the deal. These are the numbers. Help me. Have I made the right decision here? Is this a property to move forward on?" And we'll help them analyze not only the deal numbers, but the strategy and the structure that they've put into place for that deal. And then we'll give them our opinion on as to whether it's worth going forward with that deal or not. So out of the 200 odd people that we've had as part of our partnership franchise, we'll have made millions and millions and millions of pounds for these guys by helping them, by training them, by supporting them, and by you know, giving them advice on the deals that they're looking at. So that's why we're the right people to talk to you because we've got a lot of experience within property and within property investing. So let's get straight into what a buyer's market actually means. So let's put it in really, really simple terms. It's when the supply outweighs the demand. Okay. So you might have 10 people that are looking to purchase property right now, but you might have 15 people who have brought their properties to the estate agent because they want to sell their properties. So if every single one of those 10 people bought a property, you'd still have five left over. And that is essentially what a buyer's market means. The buyers are in control because there's more sellers than there is buyers. And so the sellers are fighting over the attention of the buyers. A buyer's market means that the buyers have control. The sellers are competing to get the buyer's attention. And as you might expect, if you turn that on its head and you say it's a seller's market, then the buyers are going to be competing for the seller's attention because there'll be less sellers than there are buyers. So to flip that round, there might be 10 people that are looking to sell and 15 people looking to buy. And now there's a lot of competition to purchase those properties. So that's how a seller's market and a buyer's market is referred to. Right now, we're in a buyer's market, which means there are more sellers than there are buyers. Now, this shifts all the time. But right now, this is where we are. For the whole of 2026 so far, we've been in a buyer's market, and the prediction is that that is going to continue. It's not going to continue forever, but it is going to continue. So when you're talking about a buyer's market, it might be really, it's kind of oversimplified to think of the buyer's market as in, well, if you've got 15 people looking to sell and you've got 10 people that are looking to buy, then all of those 15 people need to lower their prices in order to attract the buyers, right? And if you think about that in terms of, I don't know, pineapples or oranges, then it can mean that the price of that product drops dramatically. In property, it never quite happens like that. In property, prices tend to stay firmer for a lot longer than if you were selling pineapples or oranges. And the reason for that is people want to get what they want to get for their houses. And estate agents tend to be overly optimistic with the price that they can achieve. So once somebody's told you that you can get 300 grand for your house, as an example, that person tends to be fairly reluctant to reduce that price from £300,000. So prices in property tend to stay pretty firm. So in terms of seeing a crash or seeing prices alter dramatically, never really happens like that within property. However, that doesn't mean that you can't get very good discounts. So we're going to talk about that in just a second. Oops. So what does the buyer's market mean to you when you're out there? If the prices aren't going to obviously change that much, well, if there's more stock on the market because there are fewer buyers than there are sellers, it's going to give you better choice. So first of all, instead of having a choice, if you want to turn a house into a HMO, instead of only looking at two properties on the market, now you might have a choice of 10 properties on the market. So you've got a better choice and you'll be able to select the properties that are a best suit to what you're trying to achieve. It also gives you a little bit of time when it comes to purchasing that property. You're not going to be put under immense pressure by the seller as you might be in a seller's market. But overall, negotiating the price is where you're going to see the biggest difference and the biggest opportunity for yourself within the buyer's market. So we're at an 11-year high in terms of the number of properties that are on the market. So just this is just proof that we are actually in a buyer's market right now. So over the last 11 years, there have never been more homes on the market, more stock available than there is right now. Demand, so the number of sales that are going through is 10% below where we were last year. And that's held pretty solid in terms of the demand in 2026. So not only are we already at an 11-year high with more properties coming onto the market all the time, which we'll get to in just a minute, but the demand is down by 10%. And what that means is that properties stay on the market for a lot longer. So again, coming to that point of negotiation, that's where your opportunity is. And that's what we'll get to in just a moment. So not only are there more sellers on the market and there are fewer buyers that are looking in the market, but also we've had some pretty big events that have happened in 2026 that have contributed towards more properties being added to the market and continuing to get added to the market. So the Renters Reform Act, for example, not only has seen a lot of landlords leave the area because they don't like the Renters Reform Act, which, to be perfectly honest, in my opinion, is a mistake because there's not actually that many changes to the Renters Reform Act, and it kind of makes it more likely that once a tenant comes into your property, they're probably going to stay for a lot longer, which gives you zeros void periods and increases the amount of money that you're going to make. But also, that means that the properties are going onto the market and they're staying on the market and competing as some of those additional sellers that are looking to get rid of their properties. And some of these landlords that are getting rid of their properties might have a portfolio. So they're not just bringing one property to the market, they're bringing 10, 20 or 30. And they're not going to do that in one day. They're going to have to get the tenants out and they're going to have to um, put the properties onto the market over a period of time, which means that not only have the properties come onto the market already, but they're going to continue to. And so that 11-year high is going to, I think, is going to get even more properties on the market for even longer, with a similar number of people that are looking. So this buyer's market is going to stay. So again, when we're looking at the borrowing, it is cheap. There is cheaper borrowing. It has come down, but that's only relative to the last couple of years because, like I say, since before COVID, borrowing was even cheaper. So we have the amount of borrowing has come down to a reasonable level because it was ridiculously expensive coming out of COVID, and over the last couple of years since inflation went so high. But it has come down to a more reasonable level. Affordability is improving as well. The base rate has come down to 3.75. We haven't quite seen mortgages follow, but mortgages and mortgage companies are getting more confidence in the market, and so they will continue to gradually come down. And lenders but they are reducing their kind of restriction on who can borrow. So when you're looking to buy, the buyer's market is there right now, and because of all the reasons that are on screen right now, they're the reasons that the buyer's market isn't going to stay forever. I would predict that by the end of 2026, the opportunity is going to be over because of the reasons on screen, because borrowing is going the right way, the base rate is going the right way, inflation is going the right way, and lenders are getting confidence in the market. So instead of you just being able to borrow 75% as a loan to value, for example, the lenders are now saying, well, actually, you can have 80% or 85% or 90%. So you're getting looser lending. And the more lending, the more loose that the lending is, the more flexible the lending is, what's that going to do to the market? It's going to encourage more buyers to come to the market. And if more buyers come to the market, then all of a sudden the market's changed. And now you're in a seller's market where the sellers have got control. So that's why you need to take advantage of this information that we're giving you and the current state of the market. That's why you need to take advantage of that right now. Because if these conditions continue, and all indications are saying that they will, then we're gradually going to return to a seller's market out of being a buyer's market. So prices aren't crashing, they're just flat. But the balance is fragile. It is, and it's decreasing every single day. The property market is getting more and more buyers coming back to buy property every single day because the conditions are getting more and more flexible. House price growth in early 2026 was meant to be about 3% by the end of the year, and now it's predicted that it's going to be 1.5%. So it's not going to return as quickly as we expected, but still by the end of the year, there's still going to be house price growth, and therefore you need to get onto this straight away now, not next year, because if you wait till next year, you've probably missed the best opportunity. So how do you take advantage of it? What's the way to do it? Well, the best way to do it is to negotiate the deals. And the best piece of advice that I can give you when you're negotiating deals is to talk to the person that owns the property. It's going to be really, really difficult to find the properties that you can negotiate the best deals on if you just sit behind your computer scrolling through Rightmove. Genuinely, you need to get out there and you absolutely need to talk to people. And the reason that you need to do that is because you need to find out what is motivating them. You have to find out what the reason that they have for selling their house is. So I'll give you an example of a situation that I was put in a couple of years ago where I made an inquiry about a house with an estate agent, and the estate agent got back to me and said, well, we can go on Tuesday or Wednesday. If we go on Tuesday, we can go at 2 o'clock in the afternoon, and the owner's going to be there. So we just have to be mindful that, he's there. So we need to keep our conversations quite discreet as we're walking around the house. And she said, but we could go on Wednesday instead. And if we go on Wednesday, they're not going to be there. So, we can have a very open conversation as we're walking around the house. And I could hear the tone in her voice suggested that 90% of people would choose to go on the Wednesday when the owner wasn't there. But straight away, I said, I'll go on the Tuesday. And she said, oh, okay. Yeah, no problem. We'll go on the Tuesday. Not a problem. I'll just have to tell the owner. I said, okay, fine. So we set up the meeting, set up the viewing for 11 o'clock in the morning, and I turned up at 10:30. So there was a bit of a drive to this house because it wasn't very close to my to where I live. But I turned up at 10:30. Why did I turn up at 10:30? Because I wanted to park my car directly out the front of this person's house, lean up, and as soon as I arrived there, get out of the car, lean up against the car, and look at this person's house to make it obvious that I was the person that was coming for the viewing. And of course, this guy, he came out of his house and he said, "Oh, hi, are you here? Are you here for the viewing?" And I said, "Yeah, I'm really sorry. I'm not from I'm not from close by, and I'm just a little bit early, so I apologise. I'm happy to wait here." And the guy said, "Oh, no worries at all. That's fine." And he turned around to go back in, but straight away I asked him a question. I asked him a question about the house, and then we had a conversation that lasted half an hour until the estate agent turned up. And in that half an hour, I found out everything about not only the house itself and the condition of the house and when it had been converted into flats and so on and so forth, but I also found out about him and his situation. What kind of things did I find out in that conversation about his situation that made it interesting for me moving forward? Well, I found out that he didn't have much of a mortgage existing on the house. I found out that he was moving into rented accommodation, so he didn't need all of the money on completion. So I could do it like a split payment for the property. I could structure it as a split payment. So if I agreed the purchase price of £800,000, I could give him, let's say, £600,000 on completion, and then the other £200,000 once I'd flipped the property and I'd made my profit, which means that I'm reducing my borrowing on the date of completion. So I could have done something like that. I found out all that information just because I had a conversation with him. And obviously, this conversation wasn't like looking at questions and checkboxing a checkbox exercise. It was just a conversation. How long have you lived here? It's a beautiful house. Did your parent just talking about the conversion and just talking about the way that things have been done? It's just a conversation about the house. Now, the one thing that I did manage to do in that conversation, which I was particularly proud of, was to find out that he didn't have much of a mortgage outstanding on it. If you can get to that point, then and if you can extract that kind of information out of somebody on the first time of meeting them, then you've done extremely well because you need to build excellent rapport with somebody for them to answer such a personal question. But I had all of that information, and all that's going to do is that's going to fuel the way that I make the offer to them. Because for me to get a property at a serious discount, it has to work for him. It has to work for me, and it has to work for anybody else that's involved in that transaction. And if it doesn't work for them, he's not going to do it, right? There has to be a benefit. There has to be incentive for him to accept my offer. Now, at the end of that, at the end of that process, when I made offers, when I finally made my offer for that property, my offer was accepted at £880,000, even though he had offers on the table of £950,000. Right, so he's walked away from 70 grand just to work with me instead of working with somebody else. So building that rapport, which I know that the person that made the 950 grand offer didn't do, they just went on the viewing when the person wasn't there, picked up the phone, talked to the estate agent, said 950, and then left it at that. So instead of me doing that, what I did was I made the offer in writing, did it as a PDF, explained exactly what we were going to do with the property, how we were going to look after it, how we were going to transform it to its former glory, how we were going to do all the things that he would have wanted to do had he been a younger person. So it's not just about the money for a lot of these people that are selling property. The important thing is you get to know them and you understand what is motivating them. And then in your offer, in the way that you structure your deal, you use that to your advantage to present your deal ahead of everybody else's. So this guy happily said no to 70 grand to work with me because my offer spoke to him in a way that nobody else's did. Now, when you have that information, you need to use it. You need to leverage it. So for me, what I did was the offer that I made to him, the way that I typed that out, um, I told him about the SPV that we were going to buy it in. I told him the mechanism that we were going to buy it, and I told him the amount of money that we would pay, obviously, to purchase the property. And I also told him that I didn't want to leave 10% on exchange of contracts. I wanted to leave 2% on exchange of contracts instead, because I was going to use the other 8% to go forward with purchasing the property as quickly as possible and getting to completion. Now, why did I do that at that point? I did that right then because nobody cares. He didn't care. What he cared about was what is the overall sum of money that he will get. So once you've got, and this is exactly what I mean about contracts and understanding the flexibility that is in contracts, because 99% of the people out there do not know that you don't have to leave 10% cash on exchange of contracts. Most people think that that is mandatory. It absolutely isn't. So understanding his situation, tying it in with what I wanted to achieve from the situation, we made it work. And he agreed those terms as well. So when you're ready to go forward as well, one of the first things that I'm going to advise you to do is to speak to a broker. Speak to a broker and get your kind of your finances known, understood, and see what the limitations of your finance are. Now, when you've done that, you should sell that. You should tell people, yeah, I've got funding in place. Here are the details. Because in comparison to most other people out there, they probably haven't had that conversation yet. And that means that you're further down the road, you're closer to that completion date than other people are. And you should absolutely leverage that and put that front and center in the offer letter that you're writing. Make sure that you push why they should work with you and all the steps that you've taken in order to move forward. And then anchor that with evidence. So, send them send them any details of properties that you've done before. Send them the agreement in principle that you've received from the lender. Because one of the other good things about doing that is if you send your agreement in principle across and your the properties that you've done before, and even your ID when you first make the offer, that's going to go to the estate agent. And if the estate agent sees that you've put all of these things together in your offer, what are they going to think about you? They're going to think, wow, this person really knows what he's doing. Because the majority of the estate agent's time when an offer is being made is chasing the person that's made the offer to send their ID, to send their agreement in principle, to send all that documentation across. So if you do it before they've even asked for it, they're thinking this person really knows what they're talking about. And is that person more likely, is that estate agent more likely to recommend you to the owner of the property, to the seller of the property? Of course they are. Now, you should then use that to your advantage. And you should say, if you want to expand quickly, if you want to expand and buy more than one property, you should then be going back to the estate agent and you should be saying, have you got any more? Have you got any more like this? And in fact, the next time something like this comes in, don't even put it on the market. Just come and talk to me. Because that is where the best deals are. The best deals probably don't even make it to the estate agent's window. The best deals, the estate agent will pick up the phone and they'll talk to somebody that's the most likely to buy it and they'll sell it directly to them. Why? If you think about it, it makes perfect sense because the estate agent could put it on Rightmove. They could have 100 viewings. They could have 50 offers from those viewings. And what the estate agent has to do is they have to manage all of those viewings and all of those offers. And they're probably going to get 100 grand for the property, right? Let's just say it was on the market for 100 grand. They'll get 100 grand. Whereas if they know it's a really good deal, and instead of putting it on the market, they just call you and say, right, we've got a really good deal. It's on for 100 grand. It really works. It's actually a better return than the previous property you bought. Here are the details. And if you end up buying that property, what has the estate agent had to manage there? They've had to manage one viewing, they've had to manage one offer, and they've still made 100 grand, or they've sold it for 100 grand and made their commission based on the same purchase price. So, from an estate agent's point of view, it makes perfect sense to not put the best deals in the window, to just sell them directly to you, because all they're interested in is rolling over their stock, is turning over their stock. Because if their stock is turning over, they're getting paid. So when you make these connections with estate agents, it's absolutely imperative that you maintain them. And how do you maintain them? Consistency. What does that mean? Go and see them every month, at least every month, or pick up the phone and talk to them every month. You have to stay consistent to get the best deals. And then you use your negotiation powers by getting to know the owner of the property and seeing if you can reduce that purchase price. So, in terms of the overall property market, I said that owners are very reluctant to reduce their purchase prices. But the owners are going to get to a point where the property's been on the market for 6, 7, 8, 9 months, and now they have to move. They're put in a position where they have to move, not that they want to move, and they're in control of the situation. After a certain period of time, they have to. And now, even though they don't want to reduce their price by from underneath 300 grand, now they're put in a position where they understand that they have to move, have to change it in order to sell the property. Now, if you're in the right place and you're talking to enough of these sellers, then you'll see when these people get to the point where they have to reduce their prices. And that's where you can step in and you can really clean up. So at any point during that process, it's absolutely imperative that you buy based on your numbers, and you're making decisions based on numbers, not based on your heart. Because if you're making decisions based on your numbers, it's going to work, right? So long as your numbers are accurate and you're good at putting your numbers together, it's going to work. And you should even get to the point, because we've seen over the last 10 years how much finance can change, how much the costs of finance can change. So make sure you stress test it. Don't buy things that are too tight, because that's what, over the last couple of years, that's what we've really heard about, the kind of landlords that are selling up and moving on, the kind of people that became accidental landlords because they bought a property and then they moved in with their partner, and they didn't have to sell their property to move in with their partner, so they just kept it and they started renting it out. Well, that's not a property investment, is it? Because they didn't mean to buy that as a property investment, and so their margins were probably quite tight on that deal, so that when interest rates went up, or when the cost of living went up, utility costs went up, then all of a sudden that property doesn't work anymore because their margins were already too tight. But if you're buying specific investment properties that are their only function is to be an investment property, and you've stress tested the finance, regardless of what happens to any of the markets going forward, you should be in a pretty secure situation. Always carry a contingency. And one thing that I would highly, highly recommend that I don't see enough people doing, have a contingency pot. So every month when the rent comes in, you put a certain percentage of that pot to one side. Because in 4 or 5 years' time, your property is probably going to need a refurbishment, or you're going to need to do some significant work to that property. Now, if you've just been spending the rental income or the profit that you've made from that property, then you don't have a pot ready to do that work. Whereas if you've put some money aside every single month, then that money will be there to do your refurbishment when you need to after 4 or 5 years, and you'll be able to keep your rental income high. When it comes to negotiating, it's absolutely true. You make your money when you buy, not when you sell. The justification behind that, the sort of logic behind that, is that when you sell, you're subject to the market because somebody else is buying it. So you can only accept what somebody else is willing to pay, and you're not in control of that. But you are in control of what property you buy at the beginning. So if somebody isn't willing to accept a discount as much as you want them to accept, you just move on and you look at the next property. Because if you keep on with that strategy, you will find somebody that is willing to accept a property or an offer at the right level that you can move forward on, and you know on market conditions you'll make X tens of thousands of pounds from that property. So you make your money when you buy, not when you sell. So getting discounts is incredibly important. And one of the other things that's absolutely true is when you generate wealth from property, the more equity that you can negotiate at the beginning, the wealthier you will be in the long term. So if you have a property that's, making a couple of £100 a month from the rental income that you're making, that's not a huge amount of cash flow that you're generating from that property. If you negotiate a 10 or 20,000 pound discount for a property, the equivalent, it would take you maybe decades to make that same amount of equity in that property if you were just relying on the cash flow. So if you can negotiate that equity on day one, you are instantly wealthier once you've bought that property. So the strategies that are best placed to win, to move forward, and that will really take advantage of 2026. Deal sourcing, so finding deals for other people, because still, people don't build relationships with estate agents. And if you build your relationships with your estate agents, they will bring you more deals than you can buy yourself. I guarantee it. So what do you do with those other deals? Well, you sell them on to other people because they can't find deals for themselves because they haven't built up the relationships in the same way that you do. So sell those deals onto other people and make 4, 5, 6 grand every single time that you sell one of those deals, and put that money in your pocket after you've paid tax, of course. HMO and serviced accommodation, still two very, very strong strategies right now, and look like they're going to continue to be strong strategies moving forward. Buy to let, surprisingly, against all of the media's doom and gloom over the last couple of years that buy to let is dead. It absolutely isn't dead. It's flourishing. It's doing very, very well. People are making very strong returns from buy to let, as long as they are investors who have bought the property to be an investment property. It's the accidental landlords who are the ones that are struggling. And then flips as well. The one caveat that I would add to flips is that it is currently a buyer's market. Predicting when it's going to turn into a seller's market is very, very difficult. But ideally, what you would do is you'd buy your flip in a buyer's market and you'd sell it in a seller's market. That would be the ideal situation for you, because you're probably going to sell it very quickly. You'll buy it quickly, you'll buy it at a discount, you'll sell it quickly. But predicting when that's going to happen is a very tough thing to do because it relies on so many different economic factors. So what you should be doing right now, how do you take advantage of this right now? So talk to people that do finance for you. We've actually got some finance guys. We've got brokers, mortgage brokers and bridging finance brokers here at Sourced. If you want the details for them, then we'll provide it. We'll send you an email tomorrow and we'll provide the details for the finance brokers. When you're looking on Rightmove, look at the properties that have been on the market for a little bit longer. Use them, go to them. And if you go to the estate agent and you say, I'm looking for this kind of property, this has got the right margin, but I'd need to buy it with a 30% discount, you know that the owner of that property might now be in the position and have the right motivation to accept that kind of offer. So learn structures as well. This is a more complicated piece of advice for you. Like the structure, like making a part offer and then offering the second part once you've done the work to the property, once you've made your money from the property. Things like that can be a game changer, and they will open up far more properties to you and make them easier for you to buy with less money in your pocket than if you just understand mortgages and just understand going through estate agents and build those relationships. The important thing is you're moving now and you're doing this now while others are waiting. Other people will be waiting for this to turn into a seller's market when the market starts to move much quicker and the property prices start to go up. because that gives them confidence. But that's not where the real deals are. The real deals are happening now. So the mistakes are that you need to avoid, and you need to get this kind of mindset out of your head. Waiting for a crash to happen, it isn't going to happen. Regardless of what you've heard in the media, it isn't going to happen. Property prices are going to remain fairly stable in the current condition. And that's if not much else changes. Over leveraging on today's rate. So make sure that you're stress testing, make sure that you're not borrowing too much just in case rates change in the future. Trading on national averages is a problem. Like looking at the national media and what the national media are reporting is a problem because what's happening in your area might be completely different. And then buying into the area and not the deal. The deal is the most important thing. The motivation of the person that owns that property is by far the most important thing in selecting the right deal to move forward on. So I want you to remember that the power's on your side. It is a buyer's market right now. Take advantage of it, move forward. The evidence is in the stock. I've shown you the evidence. There's plenty of evidence right now, but bear in mind that that gap between a buyer's market and a seller's market is changing and diminishing every single day. Buy on the numbers, negotiate with certainty, only buy if something makes sense for you. If the seller isn't gonna sell, then just move on to the next property and go back to that original seller after a month or 2 months when their motivation might have completely changed. And the window's open now. It's narrowing, but it is open now. So go out there, start to build relationships and take advantage of what's going on. So one of the things that we do, I mentioned that we have a couple of franchises here at Sourced. The franchises that we have here, one of them is the property investment franchise, and that includes the training. So we give training on every single property strategy that's out there. We have over 100,000 investors that are registered with us. We've got, like I say, in-house brokers who don't charge our franchisees a brokerage fee. We've got a support team who will stand by your side, give you advice, give you suggestions, make sure that you don't fall into the kind of typical traps of investing into property. We've got a huge amount of tech that we give you as well, CRM systems, property analysis systems, spreadsheets for analysing property. We've even got a lead generation tool that automatically analyses deals for you. And then we've got an incredibly powerful brand that opens doors to estate agents up and down the country. So what I want you to do from here, take some of that advice and turn this market into your income. Our partners are doing that. Our property partners are doing that right now. They're buying properties. They're making money off from properties in lots of different ways, like rent to rent, but they're taking advantage of it right now because they understand that now's the time to do it. If you want to look at our prospectus, just to be completely transparent with you, to become a franchisee, it's 10 grand plus VAT, well, 9,999 plus VAT. And then there's a monthly charge, which including VAT adds up to about 300 quid. But for that, we can help our franchisees make between £4,000 and £10,000 per deal, doing refurbishments where they're making 30, 40, 50, £60,000, conversions, £100,000 they could be making from the conversions, and making, like £1,000 a month from rent to rent and negotiating rent to rent deals. So if that's something that you'd be interested in, then here's the email address on the screen right now, gary.mulhaney@sourced.co. So if you email Gary, take a picture of that slide right now if you want that email address. If you want to email Gary, he'll be able to talk you through exactly what we do for our franchisees. We'll even let you talk to some of our franchisees. We've got absolutely nothing to hide. We are here to help people make money from property. And that starts with understanding property, understanding what the opportunity is, and then moving forward. So that's going to be the end of the webinar. What I'm going to do is I'm going to pull up the Q&A box, and if anybody has any questions at all, then you can put it into the Q&A box now, and I will happily answer those questions for you. But the main thing that I hope you get from this webinar is that you understand that what a buyer's market is, what the opportunity is, and how you can take advantage of that opportunity. It's going to be work, right? I'm strongly, strongly, strongly advising you to not sit behind your computer and just think that these opportunities are going to come to you. You have to work and you have to outcompete the other people that are operating in your local area to get these opportunities assigned to you. but it's out there and it's ready for you and you can do it. Okay. First question, is the recording going to be available? Yes, it is. It'll get sent out to you. A link to the recording will get sent out to you tomorrow with the email that comes out. So thank you very much for your question. Any questions about property? This is always nervous. It's always a little bit nerve-wracking here because um, people can just ask anything. So next question in. Uh, how is auction property? Yeah, well, auction property is definitely part of that. The problem that you have with auction property is, um, I mean, the problem that you have with auction property is you don't know what the sale price is going to be, to be completely honest. I always think with auction property, the best ones are the ones where you can do your due diligence beforehand and then just make the offer beforehand. An auction company is just an estate agent, just like any other estate agent. So before the auction happens, you can actually make an offer on that property and you might secure it. Or once the auction is finished, you'll get a list of properties that didn't manage to sell at auction, and you can look at them and you might get a much better discount at that point. Will we send contact details for our broker? Yeah, absolutely. Well, I'll tell you what, I'll give you them now. Um, you can use the email address, John, John, dot Kefford, Kefford, @sourced.co. We will send that out in the email as well, but if you want his email address, it's john.kefford @sourced.co. Okay, that looks like all the questions that I've got, which is lovely. That means I must have explained everything really well, which is a pat on my back. So, if you've got any other questions, of course, you can use Gary's email address that I've given you. So, gary.mulhaney @source.co, and we'll be happy to speak to you and happy to help you move forward. But otherwise, please take my advice. Please, if you're looking to invest in property, get on with it. Get on with it and do it now because now is a real opportunity. And actually, my business partner has just sent me a property on Zoopla that he's really interested in us buying, which is a commercial property that's worth 600 grand. So the first thing that I'm going to do right now, after coming off this webinar, is go and look at that property. So good luck, guys. I hope you do well, and I hope you achieve everything that you want to in property. Thanks for your time.